Hey everybody, Dan Hussey here from ImpulseTraders.com. I wanted to bring you a weekly look of the Eurodollar. A lot of people have been asking why I've been kind of sitting out and stalking this trade so closely. The reason being is because it's such a major daily setup. We've got, the market is setting up for this. I can't even explain to you how few times this actually happens where you have these huge monthly or weekly trends that are setting up to be tested. Um, it just, it's once every few years, once a year maybe, you can find this type of thing. So, if that, you can go into multi-decade trends that just never fail and just keep going. But right now we're sitting, we're coming up in a huge inflection point. So here's the trade. Basically, from the 80-cent lows to the $1.60 highs, that 8,000 pip move, that is 8,000 pips, right? Yeah. 8,000 pip move held a full pullback in, what was this? This was in June of 2010. The 118 lows for the Eurodollar. It filled the 50% and did not invalidate the 61. And that trade alone, that huge weekly target here, that the target for that long is up at a 178. So we're just we're thousands of pips away from there still. So that's just something to consider, that we're technically in a long setup still. So that's the big, we'll call that the weekly setup. All right, let's move down to the daily chart. All right, so on our daily chart, we started talking about our 148.50 targets. Those became really important. This was over a month ago when we started looking at this. And from that move off of the participation that we had from the 121 area, that was that weekly trend long, we had a move higher, and then a substantial pullback that held to 50%, and we'll call this our daily trend within that weekly uptrend. So in the daily trend, we went, filled our long, went to target, hit targets, and sold off. So now what you do is from entry, right? You go from entry to target high, you find out where your next entry is on your daily. Next entry is the 139.80s, or 139.08 rather, with a 154 target. And we're coming up on that area. And, there's not much to do but sit, wait till we get there. And that's it. All right, so if we move down to our hourly now, so you can take a look at our sell-off, right? All right, so we're in a long, or we're moving down into a longer term long, right? Let's bring up our components here. We got Fibos. Let's do a retracement here. So on the move down, we have not had a 50% retracement this entire move down. It never has done a full 50%, and it probably never will all the way down, as far down as it goes. The first thing it started trading was extensions. Those extensions were from target high, new low, same anchor, new low, same anchor, new low, and each time went to target and set up the new trade. We're currently in a short. Let me bring this up for you. We're currently in a short setup that actually has targets below, and so you see where a short. There we go. So we have a short from the 143.18s that has a target to 139.20s. That 139.20 target, or 35 target I'm using, it's fronting it by a bit because of another short I'll show you on a 15-minute trend. But we are now in a counter trend short setup into a 50% long. And if we hold this level, then hold when we go to trade it, then we know, and we rally from there. Then we can buy the first pullback and take it all the way to 154. But right now, we're in short setups until we're not, and this is where this major inflection point is. Because if we have a failure here, that means we have a failure at this support zone, that is is we have a failure on the daily, on our daily setups. We have a failure of this daily trend up within this big weekly trend. So it would, a failure at 139, or really a failure of 137, well, 136.66, I'm calling it just for fun. I mean, that is the area, but it's just a fun number to have it at 136.66. We fail there. We have the potential to fall all the way down to retest the 121s, the original entry for this weekly setup, and we cut that level. I mean, there's no support, absolutely no support in this market until like all-time lows. Like we will just keep moving down unbelievably. So now I want to zoom back in past the hourly down to the 15-minute. These are the trends that I actually trade. When we actually take positions in Impulse Traders, we're actually taking positions based on what 15-minute trends, 15-minute or hourly trends do, and we use those. So we're in a short setup that's targeting the 139.20s. So I happen to believe the market still wants to go lower, even from here. Okay, and I'll show you. Oh, excuse me. Okay, so in this now we've looked at everything down to hourly, so we see where we are in this move, and I don't think it's. I mean, you got to remember here too that we are in setups that have lots of confluent fib levels at all of these levels pretty much. I want this green dash. There we go, so we can determine it's a smaller time frame. So what we had was last week we actually had from the pre-breakdown lows to new lows, it were the extensions we traded and held. We traded them once, twice, and if we break, and so we have, we have basically a pullback level that if we break highs today, the 141.30 area is the next level to sell, and we will be sellers there. But we're going to be patient here, and we're going to wait. I want to see what happens. So what happens is that this, here you go. So this trade, this 50% pullback that held here, right? Well, we blew through targets. We went down, we did hit the target, but we ended up blowing through it. You see how we did get a bounce participation off the target, but we didn't trade the next measured move off that target. So seeing as we didn't trade the next measured move, we blew through targets. We're now in an extension from the low prior to the breakdown to new low, holding the 50% extension, has a target of 139.30. I mean, within 10 pips of our larger hourly target, which is also within 10, 20 pips, within under 1%, within 0.5% of a large daily long level at the 139.80s. So this is why we've been honing in, looking for this level to trade, because I'd love to take a long somewhere down here at these targets. Or even, and we tried to take a short here. We got stopped out on a few things. The short's still valid. Short's still valid while below 140.75. And again, if for whatever reason that gets invalidated, the next, short to sell into. Actually, come on. Maybe I'll put these both up so we can have them both on the chart at once. So you can see the two short setups. I'll make this one I'll make this one some other color. We really don't have many colors here, do we? Make that one red, and I'll make that one's target red down here too, so you can kind of clearly see where it is and where what we potentially could be looking at. The red entry and target is if this one currently fails, which I think would take us down to this 139 area, to where we could see a substantial bounce and rally. And really, when you look at this chart, on a, like a 4-hour time frame, the euro dollar, I mean, it needs a bounce. This move has become so overextended. Um, it needs some kind of bigger rally up into some, bigger short setup before it really breaks down, in my opinion. Nevertheless, it is in a short setup on the 15-minute time frame, and it did trade, and it's holding that short setup currently. Until it totally breaks down, I don't have much faith in it, but it's the next short. It's the only setup I see. Longs were dirty, and this whole pattern looks corrective. I mean, there's it's just put a channel up here. So I mean, we're in this channel here, and while this kind of flagging or this channel holds, I think we go, watch for the break lower here, because we will have a 200 pip 150 pip move down to potential target lows down here, and you could anticipate a move to new lows from here to be swift, hard, fast. Might just knife these two target areas and break down lower. So if you are positioned now with this short, here's how I would play it. Let's say you have a full position, which is some even number. Let's say you have four units on from the 140 from current levels. I would take half off at 139.30, 139.35, front run it by 10 pips or something, right? Take half off there. Take 1 unit off at the 161.8 extension at 138.70s down here, and then I would let the other unit ride with break even stop and just take it down and add on the next moves, and that's how you trade. So just to quickly recap into why this 139 level is so important, it's because it's a big test of this whole daily trend that we've been following higher, and a hold of the 50% makes a move to the 154s, the next measured move, and would be really a continuation of the larger weekly measured move targeting the 178s. So just keep that in mind where we are on the larger time frame. We are kind of just in this, really, we're still in a long-term long, but this is why trend happens at different time frames. So we're in a counter trend long right now, or we're in a counter trend long on the 1 and 5 minute scale of a 15-minute short setup that's within to complete an hourly short setup that is a counter trend trade for a daily long, which is within a weekly long. And a failure of that daily long means a retest of the weekly long, and a failure of that daily long, you could anticipate a failure of the weekly as well, just because that's how these usually works. If one fails, you start failing all the way down until you find some huge support. So that's I guess one last thing here. A lot of people pointed this out. Figured I would too. There's a major weekly trend line from the 160 highs to the 2009 highs to the 2010 highs. This pullback's testing it as support. So 139, guys, I'm dead serious. We need to consider this, because this could very well be 1 2 1 2 1 2. This could be 1 2 3 4 5 1 2 1 2, and then we go up in some huge wave 3 of 3. So this is what markets do. We break down this level, this major support level right here that a lot of people don't realize how important it is. We break down from this level, and we will likely go all the way down to somewhere in the range of parity, or at least a test of this trend line below, drawn from the 2008 lows to the 2010 lows, somewhere down, the teens, the $1.15, somewhere in there. So, all right, that's all I have for you guys today. I hope you enjoyed, and that's why I've been saying we're setting up into a long-term weekly long, or could potentially. So I'll be back with you guys as price action develops.